Hi everyone, welcome to my first Miami Real Estate Whiteboard session. In this first session, I'm taking a very macro general view of the entire condo market here in Miami-Dade County. Before we delve into more specific topics in future segments, I think it's important that we get a general, broader understanding of where the condo market is today. The condo market gets a lot of attention and a lot of press, and when you see headlines, you see average prices, you see all these things, well, it's difficult to put them in context if you don't know where the market's been and where it's trending. It's like if somebody were to tell you, oh, it's 40 degrees today. If it was the dead of winter in New York, you might be happy. That could be your warmest day. If it was summer and now it's getting into fall and all of a sudden that's your coldest day and it's no good. It's the same thing with real estate pricing. You have to know where you've been and where the line is going, and this puts all the values in context. Now actually, having said that, 40 degrees in Miami would be bad no matter when, but in the rest of the country, the analogy applies. Okay, so for our first initial look, I've charted median condo pricing for Miami going back to 2007. You can actually read this in my blog, where it may be easier to follow the charts. But just wanted to talk you guys through what I think is one of the more interesting points here. It's that, and this applies to the average and the median chart. They all have the same pattern. The prices we have today, citywide, both median and average, have not exceeded previous highs. What I'm charting here is the red line showing where we are through first quarter 2017, going all the way back to 2007, and as you can see, we're not past old highs. In fact, right now, first quarter 2017, the median condo price was, 223, and it was 260 in 2007. So we only got about 86% of the way there. Similarly, for average prices, we also never got to previous highs. I think we got within 96% of those. So if all you saw was this chart of prices, where you saw there was the decline, the bottom for median prices was 2011 at about 112,000 citywide, and then it went up. And we're actually, we have a steady increase that keeps going. There's actually no problem in this chart. If you saw this chart, you would say, oh, that's generally a healthy recovery, the city is growing, and there's still room on the upside. This actually goes very well with this chart here. This chart here shows the number of active listings on the market. So it's actually pretty much plateaued since 2008. It's gone up a little bit, but really not much. It's basically held constant. So we have a market that's overall going up steadily, and we have a steady supply of active listings in the market. That seems fine. So what are all these headlines that we're seeing about inventory gluts and price drops and all those things? Well, they're not citywide. The boom in this last cycle was very much in the high end. One thing I forgot to mention when discussing the average and median charts here for Miami-Dade condos. These figures do not take inflation into account. The dollar has lost about 17% of its value cumulatively since 2007. So were we to factor that in and adjust these figures, we're actually further from the highs than these charts would lead you to believe. Okay, so where do we find problems in the Miami-Dade condo market? Remember in the last segment, we saw two rather healthy looking charts. We saw one that showed a very nice steady increase in median and average prices, and we saw one that showed a very flat level quantity of active listings counts over the last few years. So where's the problem? Well, here is step one in identifying the problem. Step one is volume. Volume is dropping. Volume highs were in 2013 with just over 19,000 condo transactions that year, and in 2016 we were down to about 14,500. That's actually below 2010 volume when they were just over 15,000 that year, and it keeps going. On my blog, I charted this quarterly. I can't draw every little quarter line on the whiteboard, but if you go to my blog, you're going to see it charted quarterly. And one important thing to notice is that the second quarter for every year is the spike. That's the quarter with the highest transaction count for any given year, so it's very important. This year so far, we've just had April in the second quarter, and we're down about 27% from April this year to April of last year. There are about just over 1,000 condo transactions this April, and last year it was almost 1,400. So that's not looking so good. All right, problem number two, or rather step two in identifying the problem in the condo market is this, and this is the scary chart. This chart shows you dollar amount of active listings. The chart in the last segment showed just the quantity of listings, right? This shows how much they're worth added up. And this clearly is showing, a very, very steady and steep increase. In fact, the slope increased from 2015 to 16. So we were about 60, what is this? 165 million total 2016 accumulated value of listings in the market, and it was 25 million in 2007. That is an enormous increase. And this right here, this chart right here, shows you that the bubble is in the high end. This is where the bubble was, this is where all the new construction was, this is really where the oversupply is. It's here. And now also, worth pointing out is that in Miami we have a lot of foreign buyers. And the higher up you go in price, the higher percentage of your buyers are foreigners. And of course, what happened? 2013, we have a decrease in volume. Well, the dollar really kicked it up against all the currencies that buy here right around 2013. I mean, actually, in going back even further than that, since 2007, I mean, the Argentine and the Venezuelan peso have both lost over 300% against the dollar in that time period. The ruble over 100%. I mean, the dollar's doing great, but that's making Miami currency more expensive. Now, I will point out though that those resource economies and emerging markets, they really hit lows about a year ago, like Christmas time, 2016, New Year's, they really hit a low and they've recovered. I mean, Brazil has more than doubled, Russia is up about 80%. So as those economies recover, that may help us. But really, the higher end was suffering from oversupply and the 1-2 punch of having the US dollar go up in value while all these emerging and resource economies got hurt on their own local markets. So we shall see what happens, but for now we have a steady increase in a supply, dollar value of inventory supply, and we have a steady decrease in volume. So Miami is a growing city, and the segments of the real estate market that are supported and accessible to the local customer and the local economy, they're transacting. That's why we're seeing a steady increase in median price citywide. However, the segments of the market that rely upon outside money, those segments are really what the downturn in volume is attributed to, and those are the segments seeing the increases in inventory. Well, I hope you enjoyed this first segment of the Miami Real Estate Whiteboard. Please let me know if you have any thoughts or questions. Thank you.